Yeah, so I'm super excited to host this panel today here. As you rightly said, we really want to focus on crypto in this panel and crypto assets. I think yesterday you have seen a lot of financial institutions talking about their journey on tokenized securities, tokenized asset. But I think kicking off this section at day 2 is really to focus on crypto and crypto assets for banks, which has been a no-go for quite some time. But I think now we see some very cool use cases emerging, and also I think we can learn a little bit what's going on in Switzerland. So therefore, welcome. It's great to have you here. I guess we start with an introduction round. So maybe I start. So Jan Rosam, I'm a partner at EY, and I'm leading our European blockchain initiatives. Yeah, Dolf, over to you.
Yeah, Dolf Diederichsen from Hyphe. We trade cryptocurrencies with banks and recently got our German license to do so in the German market as well.
So good morning, I'm Stephan Paxmann from LBBW. I'm heading the innovation and digitalization activities within LBBW and also being in charge for the digital assets governance for our bank and for all the developments we're actually doing.
Hello, Matthias Hirtschulz. I'm partner with Stephan. I'm heading the blockchain digital asset practice there. And in that role, I'm working in that space for over 7 years now, supporting different banking clients, asset managers, exchanges in conceptualizing, but also building DLT-based infrastructures and use cases.
Good morning also from my side. My name is Pertschy. I'm working for Bitpanda Technology Solution. I'm the commercial director for the DACH region. And what we are doing, we are actually bringing digital assets to the banking space as a white label solution. So bringing an end-to-end solution, which can also be modularized to whatever needs of our partners, for example, like in Raiffeisen banks or N26.
Good morning. My name is Jonathan Hayes. I lead the digital asset development team at Bank Julius Baer. Bank Julius Baer focuses exclusively on wealthy individuals, and we are one of the largest wealth managers in Switzerland with more than 400 billion under management.
Perfect. Thanks very much for the introduction. So let's kick off our panel, and as Dolf said, we can also do a bit controversial discussion today. So let's see. So I mean, we talk about crypto use cases for banks. So we have 2 banks here. So therefore, I think it makes sense to give them the possibility to talk about their plans or even what they already have in production. So maybe Stephan, do you want to start from an LBBW standpoint?
Well, actually, we look at the whole topic of digital assets and cryptos from a customer viewpoint. So we really see in our talks a lot of interest also in crypto, especially when we talk to corporate customers, institutional clients, etc. So therefore, our question is really, we are the largest Landesbank here in Germany, and we've got a very large corporate base. So we need to offer a baseline service, an infrastructure service, as a regulated company, as a regulated bank. So therefore, what we decided on the crypto use case is, first of all, we have to provide a crypto infrastructure so that some of our corporate institutional clients are basically able to start using services, starting with custody. We want to be a partner for regulated custody solutions for corporates, for institutionals, and trying really to combine that service. And based on that one, we certainly look for different use cases on the crypto space, also certainly on the security token space. But for the crypto side, seeing more and more the interest and some demands. So we're coming up with some solutions also for corporates, but also looking into the retail space. Although we have to admit the retail space is something kind of more special because it's in a different area regulated. But that's what we're working on, really going stepwise. And one of the specific use cases we're also looking into is cross-border payments for trade finance. So we are very internationally focused, and this certainly will be quite interesting because it's supposed to be cheaper, faster, a bit easier, but that still has to be proved. But that's some of the specific use cases we're working on. So providing a baseline infrastructure first for corporates, institutionals, and based on that one, using crypto cases for the further organization.
That's super interesting, especially when you talk about corporates. So I think it's also a phenomena here. So we have a lot of corporates joining here, and I think there's a lot of interest. But Jonathan, do you wanna introduce the Julius Baer offering a little bit and give a view on Switzerland? Yeah?
Which fits nicely because we focus only on individuals. So before I
we should partner.
Before we, I go into the use cases, I mean, just it's important to reflect the broader vision, right? That we do believe as a bank that the digital assets have the potential to really transform the financial industry and also the economy beyond, and that they will establish themselves really as a mainstream asset class one day. So with that in mind, the two use cases I'd like to present, first one being offering digital asset access to traditional investors. So here it starts obviously with custody of crypto tokens and market access for them, but it doesn't stop there. I mean, if you look at a lot of the publications on the internet, you see no financial advice. That's clearly not our aspiration. So we have worked hard to integrate digital assets into the wealth management offering we have. So yes, we do provide financial advice. We have a research view with coverage and investment rating for crypto tokens. And we have a lot of adjacent services such as wealth planning services, Lombard lending. The other main use case is to provide services for crypto wealthy people or crypto natives who came to wealth in the crypto space, and to essentially provide them, bridge capabilities into the traditional world. And what they seek is generally also custody. I mean, despite, don't trust, verify, and not your keys, not your coins, and so on, there is a case for diversification of custody, which we see is quite active. Second reason is to have optionality at the interface to fiat. And the third one is actually access to good old private banking services, such as a discretionary mandate on fixed income.
No, that's great. So maybe Dolf, you just stood up, or the others you want to add? I mean, what do you see in the banking industry use case? I mean, we haven't heard much about retail. I guess that's probably one area, but
yeah, I mean, maybe just I think about markets. I think it's very interesting that you see Germany and Switzerland at the moment leading from a pure banking point of view, and that's, from my point of view, purely regulatory. Yeah? So you see that because of the regulatory clarity that you have in these two markets, banks have a framework to act, and we see many of them acting. And then I think there is the big discussion, how you approach this topic, and the two main ways that we see in the market is on the one hand from innovation driven, where sort of the innovation and the strategy teams try to create first blockchain solution that obviously are very interesting and is proof of concepts, and then sort of you try to get the budget for the next stage, with sort of a lot of hesitation towards cryptocurrencies. And then we see the second way of how to address this, and that is more commercially driven, also sort of coming from customers, what they want, the needs that they see in the space, and that is sort of start with cryptocurrency trading, create a business case, make that generate revenue, and fulfill customer needs, and that gives a lot of understanding and expertise also in the organization around the whole digital asset topic, and also prepares the organization for the next steps. And we find that obviously the institutions that choose to go that route sort of move to real business much sooner, and it becomes a native skill of the organization. And that's sort of, I think one of the great way also to approach the space.
Maybe from my side to add to this, so I do see regulatory as important as the backbone, but not the main driver in the market. I think the main driver in the market is demand. And we are seeing actually demand picking up, retail as well as the corporate sector, which was really quiet over the last years. They're picking up, and that has multiple reasons. So what do we see actually happening is we have the cybersecurity cases. So what happens if I get hacked? What happens if I need to pay my hacker in cryptocurrency? Where do I go? How do I actually settle these kind of topics? I would go to my trusted bank usually to do these things, but I can't. So we need to figure out a way of how can we actually solve this demand in the market, fully regulated for sure. That's why Germany and Austria, Switzerland, we are in Europe at the frontier of this entire topic. But we need to find solutions. And the solution cannot only be I store my crypto and I can get my crypto, but I need to interact with it. So we are just at the, let's say, at the top of this iceberg of what can be done in this entire ecosystem and in this entire sphere. So, we can go beyond that. So sure, we have in the investment case, you can do staking, all these things, you can interact with it. But I think the payment case, that comes into play. If you go cross-border, all these things, you can actually optimize things. You can make things cheaper, faster, quicker. So I think we are at the beginning, and custody will be the base layer that you all need to have. And from there on, there's so much things to do, but it will be driven by demand. And we need to think, okay, what does the end user, either corporate or retail, really wants from me? And I need to satisfy this. And I think that's where we need to start.
Yeah, I think you mentioned interaction, and what we see, I think, what the question really is, how do we bring these new products and possibilities to our clients? How to create a new user experience so that we also see more adoption? And I think what we are seeing now is that classical banking apps, where I do my banking, and crypto wallets, they seem to merge more and more and become one interface to the client. And I think at that point, there could be a fully new, interesting user experience where I do my regular banking, I interact with crypto, I may stake my assets, I interact maybe in the future with a DeFi protocol, I have my NFTs safely stored in a bank, crypto custodian, and yeah, that's I think the user perspective. We need to keep in mind not only talking about the technical use cases, let's say about trading and staking and custody, but rather how we can present it to the user that there's a new user experience that's really valuable to the client. Maybe also non-banking apps, in corporate apps. Lufthansa has just started a program there. So think about new products, new innovative approaches, how to bring that to the clients.
No, thanks. So I fully agree. I mean, it's awkward for a retail customer to pre-fund their app somewhere else. So it's much easier for them if they can just use their banking app to also buy cryptos. So I think it's great. I mean, we have seen the full range. I think retail, I think we're all aware of. Then we have wealth management and corporates. So it's a proof that we see across the investor spectrum things going on, moving on the bank side. So maybe to look a little bit more on the technical side when it comes to infrastructure. I mean, of course, all of the banks or traditional banks, they have their legacy system. So I think it's a big deal for them to go into crypto. So, I mean, what do you see on the infrastructure side? I mean, you mentioned B2B, B2B2C, we heard about this. So maybe Dolf and Robert, you can talk a little bit about infrastructure.
Yeah, I mean, generally, I think for any bank that wants to venture into the space, they need 2 to 3 things. And the first one really being custody, and I think that has been mentioned already. So there needs to be a way to store cryptocurrencies for their clients. And for that, there's generally 2 ways you can do it. Number one, you actually try to get the regulatory set up yourself, and then you just need a technical partner, that like an MPC system or any other wallet software. Or you choose to work with a regulated custodian. It's also sort of not set for life, because you can start with one setup and then transition to the other one, and that's also sort of typically in terms of go-to-market makes a lot of sense. And then the second thing is you need obviously a trading partner and a trading solution. That's sort of one of the services that we provide in many of these cases, and I think since you have, at least with many of the regulated custodians, you have a very tight integration of the trading partner with the custody setup, you sort of get a lot of benefits for banks to trade with this. And you actually have also 2 professional partners that reconcile with each other, that also make sure that there's like a lot of proven balances, and you really have banking grade solutions there that are available now. And that's I think the good things for the banks. You have, on the other hand, I think if you don't want to do this solution where you pick custody and trading, you have the alternative to go with a white label partner. That on the other hand is sort of it looks quicker, but it also sort of has the downsides that you really sort of then connected to one player, and you also give up a lot of control. And that's, I think, some of the discussions that we're having with our clients.
Yeah, so I think you mentioned the gateway. I think when it comes to infrastructure, you need to make the way, as you said, the customer doesn't want to have 3 apps anymore. He doesn't want to move his money from A to B to C, do proof of funds every time I move money, especially when we talk corporates here, when they move millions every time trigger a proof of funds. You need to register on multiple sides with your KYB. It's a lot of time that go waste. And so you want to have an integrated solution. That's what we're looking for, the gateway to access this quicker, easier, as you also mentioned, to interact with that. On the other side, when we talk about banks, we need to think about, okay, I can literally at the market right now, I can buy anything. I can buy the infrastructure, I can buy the technology, everything is there. It's white labeled, it's possible. I can build, it's expensive, takes some time, but I can do so as well. The problem that I see here, and that's the major part, is do I have the knowledge? Do I actually know what I'm doing? and do I actually can operate this system? So what we have learned over the last 10 years that we've been in the market itself, to operate such a system at such a volume, at such a speed, that is something that needs to be established, the knowledge needs to be built up. And that's something where I see banks will need to have help in this. So either via a consultancy company or via a technical partner who actually has been through that and can operate such a system for a time being, as Dolf said, before you then move over and switch the ownership towards the bank again, because I'm well aware that banks want to own their own custody. They want to own the customer itself. They don't want to give that up. It's fine. That's the future. We will get there. But you need to bridge that gap for now. And you will do that with a partner. And that's where we come into play for now, to actually are that bridge for now and build up that knowledge, because that's where I see the largest gap. Infrastructure, we have it. Technology, it's available. Wide range. We're not the only ones, but regulated, and then also how can I operate it in a real-life setup?
I think makes sense. Let's ask the banks. So, I mean, what's the infrastructure you're operating on? If you can share some details. Maybe, Jonathan, you want to start?
Happy to do so. So we touched on the custody element. So we went for sub-custody. We work with SEBA Bank, which is one of the first licensed crypto banks in Switzerland, where we're also an anchor investor. I think the benefit here is that you can really focus on doing value-added services on top of the custody stack, right? So yes, sometimes I feel okay, I'd like to operate a node, I'd like to think about blockchain forks and so on, but that's the nerd in me, right? It doesn't make really sense for us as a bank. So we really focus on the value-added services on top. But beyond just the custody elements, there's some more choices. And the main one is, do you want to have a vertical for crypto in your institution, or do you go for full-scale integration? And I think what I gave away already earlier, that we think crypto will become really its own asset class. So we opted for the full-scale integration. That's, of course, painful at times, because you have to discuss with a lot of old-fashioned systems, which were not really designed with new asset classes in mind. But it has also advantages, because everything you have solved in the bank already, be it tax reporting, FATCA, sanctions compliance, and so on, you can also benefit from that. But what I like to say is also, what we've been discussing so far is buying and selling crypto, right? And it shouldn't stop there. We've been discussing, atomic swaps, DeFi, tokenized cash, tokenized assets, and so on. And I think once we get to these more advanced use cases, we'll come really to the limits of what current infrastructure can do today. And I think that's something important to have in mind if you want to, promise breakthrough and mass adoption of tokenized assets, is that, banking infrastructure by and large is not ready for it.
Basically, I would just add to Jonathan what you were saying. For us, the most important question is also time to market, and when are we able actually to serve our customers? Because the biggest obstacle actually is where do we get all the people who should do it internally? I mean, there are not too many crypto and digital assets experts just running around looking for a new job in a bank. So therefore, even if you wanted to do it, and certainly we always have the kind of the wish that we want to own something, of course, we are a bank.
The hiring conditions have improved, I would have.
Yeah, absolutely. That's probably true. But still, I mean, you need a really strong core team. You need strong developers. You need experience. And that takes time to build up. Do we want to wait until we get everything sorted out internally? No, we don't. Because the market is moving. And I see, you said it, the demand is there. I would always call it, there's a huge interest. And the demand might not be completely fulfilled now, but we see that it's really moving forward. So therefore, regarding time to market, we also decided that it's not our core business to run a technical infrastructure. Our core business is actually to serve customers with use cases, with applications on top of it, but we were looking really for experts who are doing the same thing all the time. So they're focusing on technology. We are focusing on the compliance side, how to set it up internally in the bank. And that's something we have to do. And then, exactly as to say, we see the value add not in the custody, for example, itself. That's a baseline service we have to offer anyway. But we see the value add really in further application, and that's where we are building up our teams and building up our skills. But that's more on the medium and long term. But we can't wait for the next 3 to 4 years to be ready, just once we've set up the team. So therefore, it's definitely a partnering cooperation strategy. Has to be. And, well, one day it could be that we serve everything internally, but not at this point in time.
No, I think that's one of the key messages from this panel already, isn't it? So because I think yesterday we saw a lot of financial institutions who built the platform themselves, going through all the investments. But I think on this panel we see 2 examples where banks have chosen partners for building the infrastructure, which I think is great, and also hopefully gives us a bit more scalability and mass adoption going forward. So I think you touched on an important point, which we want to focus on the next round, Stephan's on compliance. So there's a lot of banking processes to fulfill. And I think if you use a partner, we talk about outsourcing, there's a lot of pain around this. But I think what's super interesting, and Jonathan, I guess we can learn from you, is you do financial advice. I mean, usually when we talk to banks, like specifically when it comes to retail, but also corporate financial institution, it's always execution only. We don't want to get into financial advice. So can you share a little bit what you have gone through, also what processes you have set up, and maybe also looking a little bit at regulation, what your experiences with financial advice, because also, I mean, generally what's the feedback also from clients, etc.
Okay. No, happy to do so. Look, first, just environment. So in Switzerland, and I speak now only about investment offering, right? I'm not speaking about, things where you need the Swiss DLT law, travel rule, and so on. So for investment offering, we have by and large the same rules as for any general, for other asset classes. There's no custody license requirement and so on. But obviously, working with a fully licensed bank as a partner in providing custody and market access, that's a great help, and that gave us great comfort. But, it's a fast-moving environment, so we had to also think a bit about, what future requirements may be there. So we chose to be careful in a number of areas. So what we did is, for example, we consider crypto tokens as financial instruments, or, they are not financial instruments because, go and try to find Satoshi Nakamoto to issue you a client information document, right? I mean, that won't work. So they're not financial instruments, but we treat them as financial instruments for things like cost disclosure, suitability checks, and so on. And the second thing is we don't make a differentiation between a crypto token and a wrapper product on the token. So we have essentially the same rules for a Bitcoin and a wrapped Bitcoin in an ETP. I mean, I think I could go much more into the individual things. I mean, obviously we have a risk disclosure process in place, so we have actually a signed waiver for our clients. We have consciously thought about what are our target investors, so what risk profile should they have, and then we focused very strongly on RM education. So RM is relationship manager, because a lot of our client advice is being done on a personal level, in personal meetings over the phone, so that we make sure that relationship managers are qualified. What I can add also is that in the current market phase, we have opted so far not, to go for a full rollout. So for our relationship managers, it's an opt-in. We have qualified more than 100 relationship managers in Switzerland already who chose to really engage in digital asset advice.
I think it's great. So that means you have a specific team which helps you. I mean, you said at the beginning you have research, probably. So that's super interesting, and also it's interesting your note on the financial instruments. I think this will come with Mika. So therefore. But Stephan, maybe from your side. So I mean, what's been the pain so far? Maybe I don't know internally, and what are the processes and what are the the challenges you see when implementing such a service?
I would call it moving targets, because certainly we're on the way of exploration, and on the way itself, you discover so many new things, and you talk to so many different people, starting from legal over compliance, over data security, on the sales side, etc., etc. So it is still a new topic in a lot of aspects. And we've seen also with the discussion with the regulators, it's also a new topic for them. I mean, they're much more advanced now, but you can see we will get Mika end of next year, maybe 2025 then, but then it's still not 100% clear how that really adopted. So you can see it's really moving, and that's certainly something challenging also internally within our bank, that we have to talk about a couple of topics which we haven't done before. We have to build up knowledge, and then we have to think about, do we want to build up a separate crypto process, crypto compliance, or shouldn't we include it basically in our existing processes, in our existing activities which we have in operations, etc., or do we need to set up something separately? And that's something we have to compare, and we have to see which systems actually work out at the end of the day. So that's the most challenging part. So really, again, building up skills, being very clear what is our risk appetite, because certainly it is a completely different way, and then thinking about how can we set up certain products which also pays into our kind of, let's call it as a secure bank, as a trustworthy bank, into our trustworthy products, which we are able to offer. Exactly as you say, we are not providing advisory at this point in time, but we want to provide the services in order to deal with it. So this is a question, how do we combine existing processes, compliance processes, to the new ones? That's challenging.
Yeah, okay, Matthias, I don't know, what's your view, being one of the system integrators, I guess supporting multiple banks in their journey, and then maybe Dolf and Robert can add, so what's your experience being on the other side of the world, integrating into a traditional bank? So Matthias.
Yeah, so I think you can look at it from different perspectives. First of all, maybe from a business perspective, the first challenge will be to get the topic through the door, right? And to explain why also banks should start with crypto, and maybe you can argue around building the baseline and the digital asset infrastructure for other financial instruments and other asset classes coming on top on the same infrastructure, leveraging that and building up know-how today. And second perspective, maybe a technological and infrastructure perspective. I want to mention maybe two examples where you have specific challenges with regards to infrastructure. First of all, when you, for example, think about custody, security is at the core of the product, meaning that you need to think about an end-to-end process that's perfectly secure, not only on the HSM. The HSM is basically a signing machine, and everything that's input there is signed. So the whole end-to-end process needs to be secure. And this not only starts with the business processes, where you need approval processes for IPS principles and so on, but it already starts with the development process. And that might not be established in the banks in that form already, where you have really code signing, making sure that what you're deploying to production is actually what you want to deploy. Nothing is injected there what could be malware. And another example could be when you establish a cold storage, so where a lot of the cryptos, large parts of the cryptos are actually safe kept, then this is also a completely new type of infrastructure, let's say, for a bank, because you have an IT system that's completely disconnected in a secure location you need to find. You need to make sure who are the people that get access to it. You need to get updates in there. So that's specific infrastructure parts that really are new, but not to scare you too much. Also large parts of the infrastructure, classical infrastructure actually. And I think if you build up the know-how, this can be tackled as well. Third perspective is really a competitive perspective, and that's what you mentioned as well. You need to have the know-how internally to build the products, to get the credibility with your clients. And I recently spoke with a board member of a bank, and he said, how can we offer this service? We don't have credibility with our clients for this kind of services. And that's exactly the problem, to build up that credibility, to build up that know-how, and to then being able to bring together classical expertise in the markets with digital assets expertise and building great products for your clients. And maybe the regulatory perspective for crypto assets isn't that of an issue anymore, because it's pretty advanced, I would say, compared to other digital asset topics like securities. And we understand the regulation about custody, we understand how trading needs to be done, and we can today really start compliance services in Germany and with MiCA in Europe. And maybe the hardest part here is really to get people on board to convince and show the compliance department that it can be done, that some things will be different, that you can combine classical compliance with new approaches in the digital asset space. That may be the largest challenge on that side.
Maybe I can just add one point, sorry for this. But, well, actually, I don't see the point of credibility from our point of view, because that's, as LBBW, we've got the credibility. And that's the reason why a couple of corporate customers come to us and say, what are you actually doing? Because we don't see it happening in the market for all of the other parties. But we would trust you if somebody is offering something. You're regulated, you're a kind of public bank. So that's something actually where we don't need to work for. However, what we need to work for is really regarding the education. And I always say the best education within our bank is talk to customers, to potential customers. And they will tell you what they're actually thinking about. And we shouldn't think that corporate customers are kind of 5 years back. They're sometimes 3 years in advance, but they can't solve it at this point in time. But they've got very clear ideas. So all the corporate talks we're doing, it's actually showing, wow, we do have to deliver something because they expect a regulated bank offering this. So therefore, that's the best education, because then that's the case when sales is running, when internal organization is running, when we are running in order to offer a service.
Yeah. Yeah, maybe to continue on the question. So the question, sort of, what do banks need? And I think also there was the question about credibility. And that's for us, since we empowered the first security broker in Germany to trade cryptocurrencies back in 2020. We obviously have a lot of experience with these setups and making sure that the banks do trade in a way that it works with their risk framework and also obviously is compliant. And usually when we talk to banks that want to venture into this space, there's only a few things that we need to solve. The first thing is like onboarding compliance, regulatory, KYC, transaction monitoring, and we bring a lot of expertise and experience. I mean, the banks still will need to do some things on their side, but obviously we have the frameworks and we know what needs to be done, and we've been doing it for a long time. The second thing is the trading interface. That's usually an API connection that also there's like multiple options to do it as quickly as possible. Cash settlement that you need to do, that is something that banks know. Banks know how to transfer cash and how to pay their vendors. So that's actually just a question of how the bank does it specifically. Next thing is settlement of cryptocurrencies, and there we work very closely with whatever custody setup is chosen. And often we, as a liquidity provider and OTC trading partner, become a client of the custody setup also. So that means that we go into the custody setup, we work very closely with the custodian to make sure that there's never a balance on the bank side, that there is sort of everything gets settled on time, as close to the cash settlement as possible to resemble securities trading. And everything about reporting and reconciliation is also completely baked in. So I think there are solutions out there that have been proven and battle tested in very volatile periods and a little bit slower periods. And I think the question is just, what's the commercial business case and how quickly do you want to move as an organization?
Robert, very quick. 20 seconds.
Yeah, I know. So what I would just mention is it's been a long and hard road that we've been to get where we stand today, to have these conversations with bankers. We've coming from the crypto side, we've been through the trouble a long time ago. But it's nice to see. And what remains, the last 4 seconds here, is just the question of go-to-market. And that's everybody here in the room needs to ask themselves, when do I want to be go-to-market ready? And that's going to be the driver here. And then you find your partner and then you go to market, because that is the crucial thing. Start now. Do something and then you will see demand, So that is the thing. Go to market is the key.
Perfect. I think it's quite a nice closing remark. So I'm very positive regarding crypto use cases in banks, and I think we heard about this. So thanks very much, everyone. We're running out of time a little bit. So good luck with your implementation and use cases, and thank you.
Thanks.